Hello and hi my dear friends and students. Let us start a new concept in our private equity chapter, which is nothing but exit routes for a private equity. What are exit routes for a private equity? See, we have seen that a private equity invests in what are various funds, and after some 6 to 7 years generally they may exit out. How they will exit out? How they will close a particular fund? So that's we are going to discuss now here. The first and very popular method by which they close a particular PE fund is generally what here? IPO. What here? IPO. Initial public offer. See, whenever we talk of IPO, we should relate this concept to the other chapters in our financial service and capital market subject. What are the other chapters related to this here? First thing is capital market primary, and the second chapter that is related is SEBI ICDR regulations. So when you learn these two chapters, they are in detail about IPO. You will be getting here the rules and the regulations that they have to comply with, the process of the IPO, everything. But here you just have to understand that by selling their own shares. So the PE investors will be there na, for the PE fund the investors will be there na. So how do they get the money? By closing the fund here, by selling their own shares, by of listing on stock exchange, that is by of going IPO, they can get their share, they can get their money, they can exit out from the private equity. Is it clear here? One thing understand here, this is what here the most successful method here. What here? This is the most successful method of exiting out from a PE, that is private equity. Is it clear here? Then let us see the second method. So the second way of exiting from a private equity is what here? Strategic acquisition. What here? Strategic acquisition. See, strategic acquisition is nothing but like a mergers and acquisitions transaction here. But here it is like a mergers and acquisition transaction. That means acquiring a company by a larger company. See, when a larger company finds value in this small company, so they want to merge this company and they want to what here? Get economies of scale or many other benefits, right? So when a larger company wants to acquire this year, so then the PE, based on the deal between them, they will sell to a bigger company. This is what your strategic acquisition. We can take acquisition of Instagram by Facebook and all other things as an example, right? See, there the main thing is that both the parties will get benefited. See, the PE fund will be happy because it is selling for a good profit, and at the same time the buyer, that means what here, the bigger company also, the large company will also be happy because they assume that they can make some good economies of scale and other benefits from this acquisition or purchase. Are you able to understand here? So this is what here, acquisition by some larger company, and also this is a what here, win-win situation for both the parties. This is what here, a win-win situation for both parties, that you need to understand. Is it clear here? Now let us see the third type. See, the third way of exiting out from a PE is what here? Secondary sale. Secondary sale. What do you mean by this secondary sale? Here the PE firm exits by way of what here? Transferring to a larger PE. Why they will transfer to a larger private equity firm? Because generally when a larger PE finds value in the smaller PE smaller private equity so they want to acquire this and they want to grow bigger. So that's one issue. See, the smaller PE may not have resources to make the project much profitable or to get into some good profits. They may not have that much resources. So if the bigger PE handles this project, then definitely they may get the profit. So in this situation also they may transfer to another PE. Are you able to understand here? So this is what here, secondary sale. Is it clear here? So this is what here, to another PE, another private equity, then we will call it as what here, secondary sale. Yet another method of exiting from PE is management buyout, or we can say repurchase by the management. What here? We can say what here? Management buyout. We have already seen here in where here LBO, while discussing LBO and MBO, this is what here where the professional managers, they feel that rather than being employees, it is better if we become the owners of the company. Then they borrow the debt and they may purchase the fund. Is it clear? I have already said that at that point of time that what here even the owners may be interested, they may want to exit out. At that time they may transfer to the existing employees itself rather than any other outsiders. Is it clear here? So this is what here repurchase by the existing management. So already discussed about MBO here, not going in detail. And the final one is what here? The final way of exiting out a PE is what here? Liquidation. What here? Liquidation. Where a PE cannot run its project. That means it is at loss. Already it is at loss. Proceeding further will bring what here? Further loss. So at this time, let us liquidate the. At this time, what here they feel? Let us stop the project straight away. So let us exit out from this PE. Let us exit out from this project. Is it clear here? So these are the 5 routes for what here? These are the 5 exit routes for what here? For a private equity firm. Is it clear here? What are the 5 exit routes here? IPO, strategic acquisition, secondary sale, management buyout, and finally liquidation. Is it clear here? Right. We shall proceed further. Now let us discuss about angel investors. Who here? We will discuss about whom here? Angel investors. Who are these angel investors? Who are these angel investors? See, angel investors are the wealthy individual investors. See, in private equity, I have said that what here they will make investment into an enterprise once it is established as a successful CGU, successful cash generating unit. So when success is seen, then PE from private equity comes. Then before private equity, who will come here? Venture capital, venture capitalists. When they will come here, generally at the startup stage, right? Now the question is, when we have seen the differences between private equity and venture capital, we have seen that venture capital focuses on IT and technology and few other sectors only. That means for all the sectors, venture capitalists will not be focusing on. Then for other sectors, who will be helping? Are you able to understand here? And even the venture capitalists, they will invest only when it is seen that somewhat it should be commercially viable, their plan should be. Otherwise, they will not go for such business plan. See, generally some thousands of business plans come here. Only 10 out of the 1000 business plans they approve. So that means they will check all the parameters. So that means for business related to other sectors, that means other than the IT or the technology or many other business, for many other business ideas, who are the real investors here? Angel investors. They are the individual investors. Generally, these are what here? Some retired professionals who have already earned a lot of money and they like to what here? Take much risk. Are you able to understand here? Now, let us see the differences between angel investor and venture capitalist, so that you can clearly and so that you can understand more about the angel investors. Shall we start here? Right. Angel investment versus venture capital here. Right. In angel investment, individual investor invest in pre-revenue business. Here if you see in venture capital, investment is usually made in pre-profitability business by the company which pools money from individuals and institutions. So in angel investors, who are the investors here? Individuals. Here the pooled fund will be invested. Who will provide the funds to the pooled fund here? It may be the individuals and many other institutions also. Are you able to understand? This is the first difference. Now see, I have already said that the venture capitalists will see whether the project is commercially viable or not. so they will take somewhat less risk. But here the angel investors, they will if they think that this idea will success, then definitely they will invest. So this investment is highly risky since revenue stream is not certain, right? Here this investment is comparatively less risky since revenue stream is proven, but profitability of the investment company is not yet prominent. Are you able to understand here? So this is the risk level. Who will bear more risk here? Angel investors. Is it clear here? Now let us see the investment size. See, as the angel investor is only one person, he is only individual investor, though he is wealthy, rich person, still when compared to a venture capitalist, when compared to a venture capital fund, he provides generally less fund only. Are you able to understand? Investment size is limited to few million. Here, owing to the pooling of funds, investment size can range from few millions to tens of million, since amounts of funds at disposal with venture capitalists is what here much higher. Is it clear here? Investment size, who will bring much higher investment here? Venture capital fund. Is it clear here? Now let us see the type of investment. See, generally venture capitalists, in exchange for the investment they do, they generally what here get equity generally, and or sometimes they may ask for convertible debt. Here angel investors also, they will go for what here straight away equity, and sometimes they will go for what here latest trend. We have a simple agreement for future equity, safe we call it here, wherein the invested businesses gives the angel investors the right to buy shares in future equity offerings. Whenever future equity offerings are there, there he will get the right to buy. So that is nothing but called safe, simple agreement for what here future equity. Is it clear here? So this is the consideration for the fund he provides. Is it clear here? Now let us see the next differences. See, this investment takes a shorter time for a decision making since it involves an individual investor. It is very clear, no more explanation is needed. Venture capitalists take longer time to make the investment decision since they have to address several stakeholders with the differing interests. Hence, it is tougher to convince the venture capitalists for the investment decision. It is straight away here, no confusion. So let us proceed further. See, rate of return potential. See, this investment has a high return potential, even 100 times the investment, because what here at the raw stage, at the initial stage, at the startup stage, he is providing the funds. If the business is successful, definitely he is going to get somewhat bigger. Is it clear here? Then venture capital involves more calculated risk. Of course, they do get some higher returns than the private equity, but still they get lesser returns than whom here? The angel investors. Is it clear here? The venture capital involves more calculated risk, where the later stage investment returns could be much lower than the angel investment. Is it clear now? So with this we will end our what here analysis on the differences between angel investment and venture capital investment. Is it clear here? Right. We'll proceed further. Now let us see the growth of private equity firms, the PE firms. See, you can observe in this diagram what is given here: annual global private equity fundraising during the period 2008 to 2017. So during this period, how much is the fund raised and what is the funds closed also we will observe. See, so this dark blue here, it will be showing what here number of funds closed, and this is what here aggregate capital raised, what here light blue, right? So you can observe $453 billion is raised in what year? In the 2017 by private equity firms. You can observe what year? Some growth from in the recent periods. 344, 414 and 453. Only one thing that I just want to tell you here the basis to show the difference between what here the funds raised and the funds closed. Generally the profits will be more for the PE firms. This is the from 2008 to 2017, we can say last decade, right? Is it clear here? Shall we proceed to another facts, another fact regarding private equity growth? See, before seeing about the Indian private equity growth, let us see how in the quarter 1 of 2018, yeah, the number of funds closed was there and aggregate capital was raised. So here, see, you can observe what is the proportion of what is the amount of funds raised by whom here, the North America, Europe, Asia and the rest of the world. They have raised some $31.7 and $42.9, but our Asia has only $4.8. This is why I am showing now, just to show that we are growing in private equity, but that is not enough when compared to the other nations. Are you able to understand here? So generally we have got some lesser part, we have involved less in private equity when compared to other, but there was growth here when compared to history, right? So we will see that also now, so that you can understand how Indian private equity market has increased, has made a tremendous growth. So the Indian based private equity market has seen a considerable expansion in its assets under management in recent years, growing from $6 billion as at the end of 2006 to $24 billion at the end of 2016. Despite this, the growth has slowed in the past 2 years, with the total assets under management actually falling slightly in 2016. See, the fundraising was relatively consistent in recent years, with around 20 India-based private equity funds raising between $1 billion and $3 billion annually. This is on an aggregate basis. Yeah. However, in 2017, year to date, that means till the end of November, we can say the number of India-based private equity funds has has reached a record 24, securing a combined $2.9 billion. Is it clear here? The market may see, whenever the funds is closed now, they will start raising funds for the new projects. Are you able to understand here? This project will be closed, and now they will start another fund and they will raise the fund. They will start another fund and they will raise funds from various investors. Are you able to understand here? So when there are more funds closed now, automatically the funds raised will also be more at that point of time. Is it clear? Right. So there are active investors in the market also here. So I am not going in detail. So just want to show you that there was some good increase in what here, Indian private equity, right? You can observe here there are various other, encouragingly, the more India-based private investors are becoming active in the private equity. In August 2017, Preqin, so it is one of the website here which gives details about what here Preqin, and we can say Pitch Report. These give various reports regarding the private equity and venture capital. If anyone want about what here venture capital and private equity, various facts, then you can go to that website. Is it clear? Right. So with this we will see another diagram, or we can say another fact. So we can see last decade. So how was the PE growth? You can observe there was an increase here till 2007. At the time of recession was there na, so there was a decrease, and now it was gradually increasing. So this is the trend in the past decade. Are you able to understand here? See here, you can observe the largest private equity funds ever closed. See, I am showing this to what here in order to make you know some good PE firms. You can see here Apollo Global Management, Blackstone Group, Goldman Sachs, right? So these are KKR. These all are what here some famous PE firms. Are you able to understand? These are the highest deals that have ever closed. That means there is huge profit in these deals. So in order to make you know some of the names of the good PE firms, I have opened this here. So Apollo Global Management, Blackstone Group, Goldman Sachs, KKR. We have discussed about Carlyle Groups. You should know just some of the PE firms, right? So there in your material here, in your study material, what has been given here, the largest private equity buyout deals in the 2016 has been given here. You can observe in your study material here. There you can, if you observe the investors, we have seen the major investors like Apollo Global Management, Blackstone Group. All these persons only will be there generally. So you can observe the amount size, how it has observed the buyback deals. See, you can observe the industry also, sectors. Generally we have said na private equity there will be venture capital, all these they will be focusing on what are IT sectors generally, venture capital. So you can observe the industries also, how private equity will deal with. Generally venture capital will deal with what are IT sectors, and here they will deal with some more extra sectors also that we have already seen. This is about in 2016 year. This is what here about largest private equity buyout deals announced in 2000 quarter 3 2017. So there it is an ICA study in 2016 data was given. That's why I have collected this and shown to you. Right? You can observe for a few minutes here. You can observe for a few seconds what is there in the data. Okay, yeah, I think you have seen everything. So this is all about what your growth of private equity firms. We have completed what your almost the entire private equity chapter. Is it clear here? So I have taken almost some 4 hours here. Why I have taken in order to give you some practical exposure how it is happening in the real world. I have given various examples like Facebook, WhatsApp, and all these things now. So all this is in order to make you understand something what is happening in the real world. If any one of you has not satisfied with any of the concept related to this private equity, you can please comment that concept here. I will once again make you a good I will once again make a good presentation on that particular concept if you comment about that particular concept. Right here. So with this we will end our discussion on private equity chapter here. So until the next class, waiting for you all. Thank you and bye bye.